Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance all together. Well, that was a hell of a weekend, and we're here to break down exactly what happened and try to figure out why it happened. For those who don't know, there was about $450 billion that were lost from the crypto markets over the course of 48 hours on the weekend, and there was a new record-setting $19 billion with a B dollars of liquidations that occurred across all the central exchanges and trading platforms. We are here tonight to figure out exactly what happened, do a little bit of an autopsy, if you will, and then try to figure out what we can learn from it and where do we go from here. I am your host, Zenith for Evening, and I'm joined by an excellent cast of characters here tonight. First up, Tracker. How we doing, my man?
Doing well, man. Yeah, I think we were in the chats with some of the members chatting with people when it was happening, watching some live streams with the Pulse Chain conference. That was interesting, real time. So yeah, it definitely happened at an interesting time. We'll dive into it, but a lot of shady stuff, man.
Always is. For some reason, the way these things fold out, like, you just can't help it but just give territory for the tinfoil hat crowd, and they just go wild with it. But that's neither here nor there.
Is that part of my introduction or what?
It can be if you want it to be. Dace, how we doing, big guy?
I'm great, my friend. I'm great. I back in the saddle after a very interesting and unorthodox week. I got to travel a bit. I got to go to the LSU game. That was cool. And yeah, while I was traveling, I got to watch all of the madness from an arm's length. But from a crypto perspective, how I'm doing is comfy in spot, as the memes say, right? This is why we advertise to take on leverage at your own risk, as you'll learn from this story today, right? There's a reason why, while traveling and away from my machine, I was not panicked about changing my positions or about actively managing my portfolio, because I wasn't carrying a bunch of leverage. So I'm good. I'm better than a lot of folks in the space, it would seem, here recently.
Fair enough. I don't know too many people in the circles that we run with that actually use leverage, but yeah, I mean, I was getting a few text messages from the non-crypto native folks. They're like, "Hey, heard Bitcoin's down. Are you all right?" And I'm like, "Yeah, we're good. I'm not a leverage trader, so like we're chilling."
Yeah. Well, and look, it's I think across crypto Twitter, right, which is a very different microcosm than maybe our whole circle, right? But the hardcore crypto people, there's just been a bit of this emerging meta of cross-collateralizing, right? Where you'll buy a bunch of Ethereum and then you put it up on anywhere from 1.5 up to 3x leverage, and then take that money and go put it in alts because you think the 4-year cycle's over and you're trying to capitalize, right? And you're taking risk upon risk to hit whatever time horizon you may see fit. I think that's become really popular just in the past 1 to 3 months. And lo and behold, the market as a machine has figured out a way to try those people, right? I found lots of them wanting very quickly.
That still seems like a very aggressive strategy to me, but you know what? If it works out for those folks, good luck. But I think, again, this is a good example of why leverage is a bad idea. But overall, though, I think to start off, we got to call this event what it was. This was a black swan event. This is not something that was standard. This is not something that was really predictable even. And it looks like there were two main factors that really caused this thing to happen. Number one was good old Donnie T, the president, Mr. 45 and 47 himself, came out and proposed on November 1st, implementing 100% tariffs on China. And then immediately after that...
Yeah, but hold tight. What time did he tweet that? That's the big caveat here. People are using this as the excuse. Now, like him or hate him, that's irrelevant. I could care less about that. What I'm saying is this was announced much earlier in the day. Much earlier in the day, this was announced. And then the shenanigans kicked off right when TradFi closed. And after hours markets, I think it was around 4, 5 o'clock, something like that, is when everything just kicked off and it got real ugly quick.
That sounds about right. So the other half of this, prong number one, people are pointing at Donald Trump tweeting about the tariffs. The timing doesn't quite line up with the actual crash on this one, which the guys are pointing out here, which leads us to item number two, which is that Binance actually had a bit of a glitch with their system. So one of their stable coins kind of depegged, and because it depegged, it affected a lot of the liquidity, and then there were ripples through that across the other liquidity pools, and it kind of created this cascading effect where the liquidity just dried up, especially considering that one of the things you're measuring the other asset against is the stable coin, which the stable coin became less valuable and just absolutely screws up the math. And at that point, the system tries to recalculate and try to rebalance. And then that is, it's just a massive shock to the system. So let's see. USDE, Athena's synthetic dollar, which means it's pegged to the greenback through delta neutral strategy in the perpetual futures. On Friday, it appears to lose parity, plunging down to 65 cents. So their stablecoin suddenly became 65 cents out of $1, and that really, really screwed up a lot of what's going on. Outside of that, there's also other speculation about, was this intentional? Were they just trying to liquidate people? And were people even trying to make profit on it? Hyperliquid also got caught up in this one. They said that they are one of the bigger dexes out there right now, but they were still definitely affected by it. And it shows that over the last 24 hours, pretty much the majority of all the liquidations came through Hyperliquid. And then you can see Binance down here with about $2.4 billion and Hyperliquid with $10 billion. So those guys were in hot water as well. And then lastly, there was a whale that made a short bet just before the crypto crash disaster. Here we have from CoffeeZilla, the Hyperliquid whale shorting Bitcoin Ethereum yesterday was placing shorts up until exactly 1 minute before Donald Trump threatened tariffs against China. The last short was placed at 2049 GMT, and Trump tweeted at 2050 GMT. What incredible luck.
$1.1 billion short position just, minutes before that went announced. That's a hell of a bet, man. Must be freaking have a horseshoe up his butt or something, man. Or he insider traded, one of the two, right?
Yeah.
Profit of 160 to $200 million in less than in just an hour or so. Of course, BlackRock, they allegedly offloaded $970 million in Bitcoin, 80 million in ETH pre-crash. Suspect there too. On-chain forensics show, and this is all on-chain forensics. It's all been coming out too, by the way. Coordinated dumps and liquidated pulls from LP pools, 700 million plus drained. So there's some big players, big movement on some big players here. Right before we're talking this, let's say 20 minutes, 10 minutes, right before this massive dump. And after once again, the tariffs that was a moot point. They posted that midday. Nothing was shocked to the system. And then when we went to after hours, all of a sudden the dump went in. And then magically some of these major players must have a crystal ball, which is amazing. So they were able to do that. Then while that was going on, like you said, Binance had basically liquidity issues, but they even screwed people over even more, because what they did was, if you had a short position and a long position on leverage, your long position was getting crushed to the downside, just severe pain to the downside. Yet they kept that position open so you could just get absolutely destroyed. While your short position that you had on, they closed it. And a lot of people were reporting they lost out on millions, lots of money, because they closed those positions as they were falling quickly because they were trying to raise up liquidity. Once again, if you're doing leverage trading, I don't care if you're putting a straddle on where you're doing both sides so you can be, you think you're protected. You're not. Central exchanges will run the show. And I'm sorry, but if I was on Binance, I sure as hell would never touch Binance again. That's my 2 cents on it. Just because, I don't care if it was intentional or not. You've proven to me that you're not a sustainable system. You can't handle when there's, any type of shock to the system. So you've proven to me I can't trust you. Not just them, but Hyperliquid. A couple of the other ones out there, experienced. Bybit was another one that experienced it. So I would just honestly, sorry, I'm done with any of you guys. I know Sonya had reported, but then it goes even further, because the fact, now it was interesting that we learned from this, but the RH ecosystem held up very well. And the reason behind that was they're not using a traditional oracle to get their price feeds coming from. Unlike everybody else, they actually control it differently. And that proved, look how much more stable everything was on the RH system. You saw maybe, 8%. I think you saw at most 10% losses in the core coins, but then it came up quickly to 8.7. By the end of the Friday, it was weird. It's like all the RH ecosystem coins were in the green while everybody else was still massively in the red. And it does have a lot to say with how they're setting up their price feeds instead of going off a traditional oracle. So that was interesting. So you basically just saw a simulation drill. Well, I don't say simulation, it really happened, but a shock to the system to see what would happen. Now we know what happened. So if this happens again to you and you do the same thing, then shame on you. That's all I got to say. You literally, everybody tipped their hands on what happened and what you need to do to protect yourself. And if you're on central exchanges, it's not your money, just like a bank, and you agree to those terms. I don't know how many people read through all those terms when you agree to have funds on there and make your trades or set your shorts and your longs and your leverage plays, but you agree to all this. So you don't have any legal stance to stand on, unless you've got some deep pockets. You might be able to go after them because you feel like that their system misled investors. There could be some of that going on because there were some horrific, we're talking some serious millionaires got absolutely liquidated across the board. Some massive positions. I'm hearing 20 million from this guy, 45 million from this guy, 30 million. Now, hopefully they got hundreds of millions of dollars, but there is a massive transfer of wealth that occurred on Friday. That might have been the quickest transfer of wealth ever in 30 minutes. That was
Pretty close to it.
That was impressive. But what I'm saying is I wouldn't use the Trump. They keep throwing that out there, but it wasn't, because he didn't. It happened before everything really kicked off. So it was like it kicked off, everything was kind of calm, nothing really happened. It wasn't an immediate shock to the system. Everything was calm. Yes, the VIX spiked and traditional markets were okay, but it wasn't really shock until after hours when it kicked in. And then of course we're finding out the issues with the central exchanges we already covered. We already covered some of the other stuff that happened because of the Oracle feeds that went on. Yeah, I think you learned a lot. I think you learned a lot. Biggest thing is don't do leverage and think you're safe. Own spot. Don't try to do any leveraging. Try to keep your coins off central exchanges if you are going to do any type of leveraging, but then you're kind of hostage if you want to do it with them. So a lot came out of this. And of course, this morning, it looked like a lot of leverage positions were all put back on. And I'm just like scratching my head like, man, y'all don't get it. This is not like traditional markets. This is not like traditional markets. Now I get everybody's got a different reason why they're doing it, but I'm just, it's crazy to me. They're gonna snatch the funds.
Well, Tracker, look, this is how you get a V reversal. This is how you get the bounce back. Let's look at what Ethereum has done since the crash, right? We called this a black swan. How long did it last? And I don't disagree. I don't disagree, by the way. But like, BNB is already above where they were before this went down. Ethereum is only a couple $100 away from making up the whole move. I mean, it's wild. And so, but then you've got certain other altcoins that like, flash crash down 70-80% and they're gone. I mean, AVAX is toast.
Adam went to zero.
Yeah, Adam went. I mean, yeah. And so, the lesson is, don't think that because you're cross collateralized and it's going to take a 70% wick to take you out, that means that they can't take you out, because they surely can. And many people were operating on that assumption, right? Whether it was because they thought it was an edge, which everybody thinks is an edge. I got news for you, it's not an edge. Or whether it's I need to take more risk because I have hypothesis about timing, right? I think that the cycle is running out of time. Whatever the reasoning is, those people probably don't think that it was worth the extra risk now.
I will say this though, like you said, opportunities. This is why it's easier said than done, but you always want a nice little 10-15% of your portfolio sitting in dry powder ready for events like this. And in crypto, it seems like you get one every year. Or once.
Yeah, one or two a year, man. One or two nice big dips a year, I feel like. And yeah, look, I think it's even then, it's like, what do you keep it in? And that's an interesting conversation to itself. Where do you keep your fiat while it's on the side? I know you said something about rotating ETH profits into gold for a short time, which was a really wise. I really liked that move during this period. Obviously, we've been in the spot of holding altcoins and watching gold do its generational run, which is hilarious to me. But no, I mean, that was a wise place to put your quote unquote dry powder for sure.
Yeah, I'd rotated out of the gold positions about a week or so ago, just because, I feel like it's getting real frothy over there. Now, could it keep going 100% in this environment where every time you turn on the news, there's like a new macro tweet or something that shocks the market? Sure. So people are going to start running to precious metals. But I just look at that parabolic move. That is such a frothy chart. And if you can draw
For
the
the
line,
world's most
you
dense
have a
asset, right? Like
yeah,
it's not just any asset that's doing this chart.
right, but it's a textbook. So you see the sideways consolidation. Zoom out just a little bit, zoom just a little bit more, zoom back out again. So you see the sideways consolidation that started occurring right around that point here, and then it had a textbook breakout. So you're pretty much going to equal the sideways momentum to the upside now. But basically, you could take a channel, those green candles that have been printed since the breakout are in this nice tight channel. If you're in the gold position, you could easily stay in that channel until the momentum is lost. And what that means is you can hold your positions in gold until you see it break out of the channel, because this is a momentum trade right now. I know people are in it for the long haul, but if you have any trade position, that was typically how you would work it. So if you see a break down out of that channel, that might be a signal to say, okay, maybe it's time to start rotating in some other laggers. And I think that's a lot of what TradFi are looking for as well. But yeah, I just think, to me, this whole thing was just reeks of a liquidity grab across the board. Now, for the long-term people, this is the kind of, like you're alluding to, Days, this was the shock that I think we needed to try to go higher, which would be great to see, because, I mean, it just purged everything. Everything was purged across the board.
Yeah.
So
Well,
it was
you're talking
interesting.
about people already put back leverage on. It's because the field's full of the dead bodies, right? Nobody else is left to hold it down. And so as people start to accumulate spot and learn their lesson, try to rebuild, people are going to start taking out leverage on those. But you know what I mean? It's the coast is clear, so to speak.
Well, maybe that's, like I said, that's the flush we needed to start going up, because that definitely purged everything. So that's what we're hoping to see now going forward. And like you said, everything that in our membership channel, I mean, we were in there talking, telling everybody to sit tight. This is just a whoosh down. And if you have any dry powder, put it to work if you can, while you get these, like, clearance sales that go on, because these are great opportunities. So if you had that 15% of your portfolio, or 20, whatever it is you like to stay in dry powder for these, I'd like to emergency break the glass type situations, you would then put those positions on whatever you want. Then as it came rallying back, go ahead and just take it back off again. So now you're it's just a way to grab a nice it's a nice way to grab some extra liquidity on those, when people are shocking to the system, people are irrational, things just start flushing. And you saw this also with the rotation. Actually, you saw this rotation also in 401ks. Not into this, but a lot of people have been moving into more defensive plays on 401k. So a lot of people are starting to step to the sidelines, which is interesting. I bring it up because I think more and more people are getting bearish, and this is just another narrative to spook people. So I'm still on the contrarian side. I still think we're going up personally.
I agree. Go ahead, Z.
I think there's doing my research and just looking at the charts. Was it a massive shock to the system? Absolutely. Is it like a permanent drop to the system? I don't think so. And I think that it was similar to what Jay was talking about the last time we were talking live with him, which is that he was saying if we blast up past the all-time highs, then it was going to reduce the amount of time that we could keep going up. But if we maybe just push up a little bit, drop down for a correction, that would allow us to pump harder the second time around. So if you go off that theory, this is exactly what he's talking about there, which is that it's lining up to keep going higher than we initially thought, because our new all-time high is at 126,000, which is only 2,000 higher than what we had previously. But I guess as a slightly separate point, I want to make sure that this is not overlooked. This was just on the scale and scope, this was massively larger than anything else we've seen. This is the day that we had our $19 billion in liquidations. This was our previous all-time high right here.
Man, had to get all those pesky 109K longs out of the system.
Exactly. But just look at the scale of the chart, which is that the last time we looked at this one and we looked at September 21st, this candle looked like the one that we just got in. But now this candle makes that one look tiny, and everything else barely even registers. That's the scale of this.
Look at the shorts. Look at the shorts that were liquidated, that were closed out. That's as big of a candle as our last long, it's as almost the same volume as that September long liquidation candle. That's nuts.
Yeah. It cannot be overstated. This was an absolutely cataclysmic scale of event when it comes to the liquidations. So what's it going to take to top this one? I mean, I have no idea, because this was digital failure on part of Binance. hyperliquid was a central point of concentration, and they really had like that falling knife effect, just absolutely just domino everything going on. And then, I mean, people are speculating on the insider trading. They're speculating on just the exchanges just trying to wreck people for the sake of making money. There was so much. So yeah, if anyone else is out there sitting here on a Monday afternoon trying to like look at what happened over the weekend and it just doesn't make sense, believe me, you're not alone. A lot of people are going to be arguing about this for years at this point, I bet, about what really happened at the central exchanges, what really happened with the hyperliquid whale. Did the Trump tariffs really do anything, or was that just a smokescreen that people were using to try to like mask their original intentions?
Yeah, there's not a lot of like cut and dry answers. You know, I mean, DDoS attacks are cheap, right? It's easy to be like, oh, we were DDoS attacked. Who knows who did it? I mean, you know, the truth is anybody could do it. And so, yeah, it's a sketchy situation, man. And then, like I said, the clear evidence of a wallet that opens hours before and just absolutely cleans up, that part's kind of wild. It's all pretty wild. And like I said, I think I said this in the green room before we went on. Every time you interact with an exchange, it is a net negative expected value exchange. Whether it's you're paying fees and they're handling your money for you and telling you they're doing a service, or if you're locking up all your money with them and they're telling you they'll be happy to give you a loan, right? Because if you go take out a leveraged position, you don't own anything. You have a loan from worse than a bank. And so, yeah.
I mean,
well, I'll say this. Trump tweeted at 11:26 a.m. on Friday. When did the sell-off kick in?
5 p.m.
Something like that.
Yeah, it was 4 or 5 hours later.
It's a moot point. There was no way that's what caused this trickle effect. Give me a break. That's a joke. This thing was the bluff is this was a massive centralized liquidity grab that just took a ton of people out of the crypto markets and now moved it into a small set of hands. All that money. And how much was it again? How many billions of dollars was it? Or how much was it? How much money was transferred over to other people?
Total liquidations was 19, right? 19 billion.
The liquidations was 19 billion. The total market cap moved the entire market about $500 billion in 24 hours. Okay. It went from about 4.2 and change market cap all the way down to about 3.8.
Yep. So how many people lost money versus how many people made the money? That's what I'm trying to say. It got consolidated down to a very small group of people quickly. And
correct.
That's exactly
exchanges and the minority. Yeah.
Yep. And that's exactly what's happening. And that's what they want. That's why they keep pushing these leverage plays on central exchanges. And they keep pushing it. And people need to understand it's one big honeypot. Do not do it. Now, if you want to get in there and play with a little bit of money that you can afford to lose, and you be my guys, you do your thing. But people are out there just, God, it's crazy how much money people had out there. I mean, I mean, hey, if you got $25 million and that's pocket change for you, hey man, more power to you. You know, I mean, that's great.
But even still, I mean, just know what you're doing. It's like saying if you have enough money to go to the casino and pull the lever on the slot machine, more power to you. Like, same thing. You know what I mean? Like, my favorite crypto founder, Richard Hart, just tweeted that trading is death, right? To just boiled it down. That's always been a big message of his. He's written books. He's like got a serious message around, you know, delaying gratification and not playing these sort of games that are not productive to society. And like I said, just on a fundamental level, that like you don't own things, right? When you take out leverage, you're not actually owning a thing. So you're not removing supply from the thing. So you're not really participating in the thing. To circle back on a conversation I had over at Dejan Roundtable last night, you know, the conversation is always around, is this time different or is this time not different? And with respect to what a chart is a history of prices paid between one thing and another. And so because there are more ways now to interact with the Bitcoin chart, namely leverage, this story, people being able to lock up money and then take out these huge multiples of their money's value worth of a loan to put towards leverage on the chart. That's something that hasn't been able to be done in previous cycles. And so quite literally, the chart has to move differently, right? Because it is being acted upon differently than it ever has before. Not to mention all the dynamics about money supply interest rates, all the other things involved. But just this story alone, right? When it comes to leverage and its interaction on the chart, we're seeing it do stuff that we've never seen it do before.
That's very true. And by the way, just to give you the after action report, in pretty much a few hours, we went all the way from 120,000 to 109. Some charts have it going even as far down as like 106. It depends on who you look at. Like this one's Bitstamp, but if we go flip over to Coinbase, they, for example, have their wick all the way down at about 107,138. Some exchanges claim to get all the way down to the 105s, but in general, that's pretty much what we're looking at. Since then, though, there's been a pretty good recovery. So all the way back from 109 up to about 115, and we're even sitting above our 50-day moving average. So it's a bit of a recovery there. We'll see if we can keep climbing higher and reclaim the 20-day moving average, because we were looking really good before all this happened. Like we wanted to go higher. Other coins, though, Ethereum had a low of about 3,400, so a pretty significant dip, but it's all the way back to 4,250 right now. Again, right at about our 20-day moving average. We want to go look at Solana. Dipped down to about 170, back at 210. So good recovery from a lot of stuff all around, but there are some things that just kind of got
check out XRP. XRP one was insane.
Yeah, this one dropped pretty hard. So before the dump, they're about $2.80. It got all the way down to $1.38. That is more than a 50% drop. And this is XRP. This is like what the third largest market cap coin out there right now. I wonder if it still is holding on to that third place spot after this kind of dump. But it did bounce back, and we were sitting back at about like $2.60. So overall, though, what we're seeing is that some of these tokens had very, very large dips, even though it was like temporarily, like 15 minutes worth. But something like even a meme coin like Doge, it got all the way down to about sub 10 cents, coming from 25 cents effectively.
I hadn't looked at this chart. Interesting.
Yeah, so pretty much it almost hit all-time lows from the bear market back in 2024.
Oh, I remember 10 cent being a potential entry for me in my mind. That's crazy, man. What did AVAX do? Curious about it.
AVAX didn't crash quite as hard. $28 to about $17, recovered to about 24. So it's closer to the XRP territory, but it's not like it's closer to a large cap coin than the altcoins that we saw. But even stuff like Crow, because this is the Kronos token from crypto.com, which has done pretty well recently. They went from about 20 cents to about 7 cents. So that's about a 66 or 70% dump on that. And then we've corrected back up to 17 cents. So again, the lower you go down on the market cap, the more affected these things were. I think in particular, Sui was a very interesting one, because it went all the way from like $3.48 to just under $2. And then now it's back up to almost $3. So Sui was one that was really affected, but there's other stuff that's held up pretty good too.
Well,
so
and I think, like I said, as of yesterday, BNB had made up the move and then some.
Oh yeah, no, you're correct. Like they're sitting back at $1,300 right now, when their previous all-time high was $1,372. They dropped all the way down to about $900, and then just super fast. Like, look at the time scale on this. This is the 1 hour chart. Like this drop and recovery all happened in the same hour. Like even on the 15-minute scale, you get like one, maybe two candles showing that at worst, this thing was lasting as long as 15 minutes. And that's pretty much the window that you had if you wanted to try to capitalize on it.
Of course, the Ethereum fees spiked to like, I think the Ethereum fees also spiked up to like $700 a transaction or something.
That's what I heard too. I heard that numbers as well.
Good old gas fees.
Pulse chain users unaffected. Just saying. Yeah, look, it's a wild thing to watch, and it does ring true a lot of Richard's axioms, right? Who have like not been popular the past year or so, when it comes to new leverage products that take over the market, like you mentioned, Hyperliquid. And before that, there's so many different new ways to take out leverage in the market, and more will continue to pop up. And so, yeah, I mean, people who used to slam Pulse Chain for not having its adoption and say that until you have a real Oracle, you're not really playing the game. This is an interesting counterpoint to those folks for sure.
There's also rumors talking that Binance used a lot of their, used their issues as an opportunity to buy back their coins too, which is why BNB is back to its original price it was
Correct. Oh,
when everything
100%.
happened.
Let's think
And that
about it
thing
from the
got down,
perspective
got
of
down to
the,
870. Now it's back up to 1300. I mean, it's like,
yeah, man.
come
I mean,
on.
if you're Binance, whether it was your fault or not, in the position that you're in, you know that all of the liquidated, that all the leveraged longs below are gone. That literally, there is nothing on the open interest chart. Wouldn't it behoove you to go take out some spot bags and then put a little bit of leverage on and watch it start to take off and push the ball the other way? I mean,
Right.
it's easiest money you could possibly make if you're the one that knows and runs the book.
And I know that Bitmine, our buddies over at Bitmine, they took advantage of this. They bought $104 million worth of ETH on the sell down 3 days ago. So when it happened, they snatched up a bunch.
Sense, but tell you what, let's try to bring this back a little bit. So, who were the losers? Who were the winners? And who was mostly unaffected? Obviously, the losers are anybody that had open leverage positions, because odds are you got liquidated. And if you had both positions open, we saw the shenanigans that was going on, which is your more profitable position, which they're supposed to cancel each other out. But the exchange went ahead and closed your position, even though it still had room to run. Meanwhile, the other one was still running into the losses. So those are the folks that really lost on this one. Who are the winners on this one? There's the speculated inside traders. Those are the people that made just
allegedly
unrealistic amounts of money so quickly. Again, this is
allegedly. That's a great word.
Yeah. The other group of people that really won on this one were people that were prepared for this kind of thing, and they were either quick on the trigger or they had limit orders in place ready to go on exchanges. Outside of that, the people that are mostly unaffected are people that are either not in the market or in the market for spot. Because if you just held through this and you didn't touch anything, odds are you're probably down like maybe 10, 15% overall. But this is also a very short time scale that we're looking at it right now. So like we're coming off like 4 days after this pretty much based on the charts, if you want to go with this. So it's like, is this really soon enough or long enough to understand what this position realistically did to your overall portfolio? I think not. I think we still have larger forces that are going to end up playing out and having more of an effect. I would love to see October still be a very green month. As it stands right now, it is still technically in the green because we started here at about 114,000. We're sitting at 115,000. So that's still in play. As far as our 60-day cycle, we're currently on day 43. You could make an argument that it was a 39-day cycle, especially depending on which chart you look at and how low this wick got. But at the same time, a day 35 high implies that it's probably going to go longer than 60 days. Something like this really does not line up with the rules. So you'd be arguing for a failed cycle, which, if anything, this is probably the best argument for a failed cycle that we see, because it's literally a failure of the pretty much a large chunk of the entire system. So that kind of makes sense. But at the same time, I wouldn't be surprised if we still see just normal 60-day cycle continuation out of this. And then on top of that, I mean, other tokens are still doing their stuff. So Ethereum looks like it.
Yeah, you also had other winners though. People who had dry powder that were able to deploy it when everything got sold down. They gobbled up some really good discount prices at some ridiculous prices if they jumped on the right ones that were selling off hard that did come back. I mean, so that was a huge win. I think the thing that bothers me about this more than anything is these kind of shenanigans are going to start pushing. I have a feeling we're going to see more of this. It's going to be a lot more of this kind of games being played because how low the market cap is and how easy it is to push it around, as we just saw. So personally, I'm always going to have a little bit of dry powder on the side for incidences like this, just to have something, be prepared to deploy it when you get these opportunities, because they are going to come again, guaranteed. And the other thing that I'm worried about this whole thing is it's going to push for people to want more regulation in crypto. And when people say, "Oh, more regulation, that's what we need," well, just be careful what you wish for. That's the other concern I have. Because in TradFi, they did the same thing with the silly circuit breaker rule. Anytime, which the circuit breaker rule is when anytime a market moves more than 10% in the day, they halt all trades. So they rigged the game. It's not a free market. They rigged the game. They shut the market down and everything like that. And it happened. Last time that really got triggered bad was, God, I want to say it was right around 2001, 2003, no, 2013, 2012, 20, something like that. We saw a 30% sell off and almost, I think it was 10 to 15% sell off in a 30-minute time span. It was a massive dragon's tail on a technical TA analysis on a chart, and they reversed everybody's trades, which is another rigged system. So that's the concern I have with the crypto market. It's becoming more and more taken over by TradFi, and it's going to be treated more like the market, and they're going to put all these different rules to basically benefit the large institutions, and that's my concern about all this. So it's something we got to keep our eye on. Basically, what I'm saying.
It makes sense. The more regulations, it's just more people trying to get their hand on the steering wheel, whether it's for good or worse or just different, honestly. But similar, like you're talking about with the circuit breaker rule, if you have part of the point of the crypto markets is that they're less regulated and they're able to operate kind of freely and independently 24/7. But if you have regulators who are, human beings with an actual sleep cycle, then you could start affecting that 24-hour market. I guess, yeah. Any other losers that we have from this one? I feel bad for people who had maybe a project just absolutely go to zero as a result of this dump. Because one of the things that happens when we have a large market correction is that your larger cap coins are not going to fall as hard as your smaller cap coins. But at the same time, all of those prices are still eating through the order books for their respective tokens, meaning that people that set limit orders, that's what might be of unheard of prices, did actually get those limit orders met, meaning that real money was transacted. It's not just like a blip on the chart. It shows actual price history. So there are unfortunately some tokens that might actually get just like fully washed by something like this, just because it dumped so much that it might be irrecoverable, or the losses are just so massive it's just going to scare people away from the systems. It's unfortunate to see, but realistically, that's kind of what's going on.
I know a lot of talk around, just really quickly on the point you just made.
Yeah.
I know a lot of people have spoken about the idea that, like, over time, there will be only Bitcoin, right? You have people say, like, all the other ones are going to go to zero, and, like, I don't know about all the other ones, but, like, for sure, plenty of the other ones can and will go to zero. Like, their point about the volatility is overblown, but it's not completely unfounded. Like, I think the possibility and viability of tokens going and staying to zero is very high, considering how crypto works. I mean, it's truly sentiment based, right? It is the network of people that decide to stay, and they can click out instantly. So you're absolutely right.
I mean, the market's saturated. There's going to be a purging, and we typically get that during bear markets to see who's going to survive. But yeah, I think you're going to see a lot more consolidation around the crypto markets, whether good or bad. But it's so saturated. I mean, and I'm not even talking about meme coins. I'm not talking about any of that. I'm just saying it's just saturated in general by so many projects. So
yeah, and that's why I keep pointing at the Ethereum ETF staking rules. Once they get passed all the way across the board, these institutions will look at it differently, right? They have the opportunity to see value in accumulating this thing that is based off of instant sentiment, right, in the short term. But for now, it makes them more money to play the leverage games, or we would have a different chart. And so I think when the rules change and they're able to stake and earn yield on this stuff, they will act towards it differently. That's my speculation. And that's when you're going to see some of these Tom Lee price targets hit for Ethereum, as the accumulation of the Ethereum outweighs their incentive to manipulate the price.
It's true. I mean, Tom Lee has put some high price targets out there. So I personally think it might be a bit before we start seeing that kind of stuff. But look, if we can actually get more of this kind of stuff, like Bitmine, 200,000 Ethereum, just, super small purchase right there. Total of like, I don't know, almost $1 billion at current prices. So more of that's going to be the kind of stuff that gets us up to those Tom Lee prices. But
right.
I think it's just going to take more of it.
That's right. No, it is going to take more. These guys are trying to be the front runners against the Grayscales and BlackRocks and all the conventional big institutions, right? They're trying to outpace their stacks because they see an opportunity to compete with the big boys. I think a year ago or so, I was talking about this when the first ETFs were passing, that like there are going to be new digital hybrid institutions that are going to rival the old VC firms and the old banks. And if we're going to see the prices that we want, it's going to be an accumulation war between entities like this and then traditional finance entities, right? And that accumulation is what's going to cause the sort of step function on the chart that everybody's looking for.
There's an interesting theory that's going around. I was researching this, looking at it, and basically these institutions that are accumulating these ETH treasuries and crypto in general, that they are going to be essentially extensions of the US government, potentially, that they don't need to necessarily have a crypto reserve. They'll just buy percentages of these companies. And of course, you can't go in there and start picking around at the details of what these companies are doing because they're private entities. So that's another strategy that could come to fruition, very much like how the tech sectors with social media and search engines and things like that, with those various companies that the government's works closely with. You could see something similar to that happening here, and this might be the early stages of that, of course, and maybe it may not come to this fruition, but I guarantee that they are starting to look at which way is the best way to go out and doing this, and they are starting to research that now. So it's going to be interesting to see, but yeah. And then, of course, the other one that we talked about a couple of weeks ago, I think, when we were saying how people are starting to not recommend treasuries to clients anymore, that seems to be falling out of favor. Now, there is some argument that the long-term treasuries seem to be falling back into maybe favor a little bit, but still a lot of people are starting to shy away from the treasuries and starting to lean more towards the gold and potential crypto as another alternative to investing in a more strategic way for their clients. Not saying massive pour in other portfolios, but they could certainly start pushing that to remove treasuries because of the inflationary aspect that the government keeps pushing on those. So if even at that, let's just say just 2% of someone's portfolio across the board money funds start to say, hey, I want you to start getting in a little bit of crypto, a little bit, 2% of your portfolio, which is little to nothing, but that's a massive amount of funds coming into the crypto market that would certainly push the market cap up to 10, 15, potential 20, get to that goal level of 20 million or 20 billion, I should say. Sorry, 20 trillion or 25 trillion now. I think gold's at now 25 trillion. So because of the move it's had. So yeah, there's a lot of things to start greasing the tracks, but that's something to keep your eye open. I'm just curious to see what kind of back end deals and things that the government might start working with these companies that already have the positions being built up right now.
Makes sense. What do we estimate? I think it's like all the retirement accounts in the United States for like 401ks and stuff is approximately $50 trillion. So even if you get like 1% of that, that's still $500 billion into some new asset class somewhere. So it's so big, like it has the ability to move stuff for sure. So if you can get into it, great. If we kind of spurn those folks, they never get into it, well, that's a lot that we're missing out on. But at the same time, I don't think we're entirely reliant on people trying to put retirement accounts in Bitcoin for it to pump. I think we still have plenty of outside factors and abilities to do that beyond just retirement accounts.
Let's not forget the SEC announced that they want to put all of the New York Stock Exchange on chain.
Yes,
it's true.
Let's not forget.
Which kind of goes back to the other thing that we were talking about. So it's amazing what NVIDIA has done because of the AI trade, right? Because it's basically the backbone with the computational power that NVIDIA is providing. I know there's other semiconductors that are out there that are also calling in favor. But if that's the case, then are we looking at potentially as Ethereum as the backbone driving factor for the infrastructure that would apply to, tokenizing of assets across the chain?
Yes.
Which they've already started pushing it. So maybe we are in that infant stage that would kind of align to that same theory, just not in AI, but in we'll call it the massive upgrade of traditional finance to on-chain.
Yep, I agree. That's the bet, man. I mean, what I'm holding is leverage on that happening. That's how I view my own holdings personally. So I have great conviction in this thesis. Personally.
I have conviction too, man, and I'm not selling because it seems like every time I get into these positions of forecasting what's coming, I always tend to get in really early, and I tend to leave too early. And I'm not
Right.
doing this again. I'm not. I did it with so long time
Showing your
ago.
age in the tracker.
I
Helps
know,
show your
I know,
cards.
man. Man. I know. So when I was in college, man, I had a professor who was pushing Google, told us all to get into Google because he was an investor, but he knew because he saw the we were taking computer science. He told us all to get into Google. So got into Google, but I got out way early. This was way back when it first went as an IPO, like way back at the beginning. And then Facebook, I remember when Facebook went live, and didn't buy in at the very beginning. I waited for the flush down to when it got below $20 a share. No, it just kept going. And I always tend to get out of these things way too early because you're front running them so early that you just got to let it sometimes come to fruition. I think sometimes the rule that I've learned, use my mistakes to learn from, and that is sometimes when you're so close to something that you seem like this is an old trade or everybody should know about this, but in reality, nobody really knows about it because the world hasn't caught up yet. So just keep that in
Yeah,
mind.
man. Yeah, look, it's true. I think my most recent visits to Chase Bank, when I'm mentioning crypto and like they don't know the new legislation that they have to follow, and then also some new people in my personal life that are very much in traditional finance and like they don't have a clue. Like it is incredible to me how many people aren't aware of basic crypto knowledge, right? Which is a part of why we're here. It's part of why we're here. We want to educate everybody, whether it's people who are super inside on it or people who are just starting out. And so we can't cover all those bases all here all the time. And so we've set up resources for people to come check us out. Get plugged in to sort of the daily stream of our thoughts on the crypto news and stuff. The best way to do that is through Telegram. So we actually offer a private Telegram service, sort of a hybrid service. There's a few different things. Zenith, what is it?
Well, for folks that want to get involved in the Telegram, you can head on over to our website, walktheblockndf.com. That is the main portal where you can find all of our stuff, links to the social medias, where we're at right now for our streams on Monday nights. But more importantly, you can find the membership tab where you can get signed up. We'll get you inside of the Telegram. Inside of there, you're going to find exclusive live streams, our running chat of consistent conversation and Q&As, and then everything else that we post in there, including our stream archive. So all the exclusive stuff, we keep it inside the Telegram. That's where you can find it. But folks, we know that the waters get rough, so don't sail them alone. Come join us as we try to navigate all of it together. We have exclusive live streams, Q&A, great conversations. Try to go from beginner to intermediate to expert, all with us. When we all work together, we can all win together. There's plenty of room on this ship. So we would love to have you, and that is where you can find us.
Well said, sir. Yeah, look, if you want priority access, right? If you have questions and you don't want to ask them here publicly on YouTube Live, we get that. So, if you want quick answers from any of us about any of your questions, whether it's technical or even just like how to onboard, how to use an exchange, how to use a cold or a hot wallet, what do those even mean? How do I get involved with this past? We keep saying don't trust exchanges. What if you're over there sitting this whole show saying, all I know how to do is buy Robinhood? Like, hit us up on here, and we can help you. We'll walk you through exactly what you need to do to get your money off of Coinbase and onto a wallet whose keys you control. And that way, in the event all of Coinbase goes down, right, your money is safe because you hold it yourself. Whether it's through a hot or a cold wallet resource, which again we can educate you on all that stuff. I know that's not what this show's about, Z, but I think it bears mentioning on the show, right? Since we're putting such thumbs down towards these exchanges and saying don't use them as little as possible, there are other tools. Like, come educate yourself if you don't already know. Please, that's what we're here to do.
Yeah, I'd say DeFi was a winner during this whole thing.
Correct.
Because
DeFi big winner.
Wow, that's what I said. Comfy and spot at the top of the show, man. Like,
Mhm.
because of how I'm treating crypto, this didn't scare me all that much, right? I was away from my computer. I was unable to do anything about my positions, and I wasn't really overly concerned because of the nature and this number one, the scale, right? I'm understanding that I'm playing a certain time frame. My expectations are around, but not about a specific time frame, but a sentiment time frame. And we get into that often on shows, whether it's like the PMI numbers or your price cycle top indicators. There's lots of different things we try to look at for top signals. If your time horizon is 30 minutes because you're leveraging 100x, and then you've got a 25x hedge, and then it shuts down and you can't manage either, well, you're playing a different game than I'm playing. And so it probably bothered you a bit more than it bothered me. So like you said, I agree. I think long-term DeFi and owning your own keys and coins, that's the winner.
Yeah,
Well
when
said,
we were in
sir.
the when everybody's freaking out on the thing, we were in there in the Telegram on Friday, and it was basically just stating things like this is just a major overreaction to the sell-offs. And of course, we didn't, at the time we didn't even know the details, but we just knew that it was exacerbated to the downside because it just was. And then that if you had dry powder, go ahead and start releasing it if you can, right? Then start scooping up those low options. But if you missed the bottom flush, wait for it, and you would get it would then come back down more and retest. And sure enough, over the weekend it did keep coming back down until it finally found some bottoms, but those were opportunities there, so that we're all working together so we don't freak out over overreacting. It's just a way to do a sanity check, because when things are happening in real time like that, it's crazy if you haven't lived through it. I mean, personally, I think I've seen so many freaking things like this. I'm just so numb to it, man. I'm just so numb. Like nothing compares to the financial crisis of 2008. Nothing comes even close so far that I've seen. I mean, maybe the COVID crash, obviously that one was a flush, but outside of those two, those to me are real big black swan events. Of course, 9/11 was a big one that the markets got absolutely riddled hard when that happened too, of course, but those are black swan events. This is a black swan event for crypto, certainly the most liquidity grab in the history of crypto. So it was huge, but look how quickly it recovered though. So that's
I
why
would put it in that like B tier with FTX collapse. It feels really similar to FTX collapse.
Yeah. So in the history of crypto, I would say it's definitely a black swan major event that took place, but it was an opportunity to buy, opportunity to grab. When everyone's freaking out, that's the time to start, trying to load up and try to pick it up. But sometimes it's not. Sometimes you think there's more continuation, so you got to be patient. So that's what I'm saying, by being in a group where you can talk and gain what the heck is going on here, what in the world's happening. And you don't have to be in there live. You can go in there and you can see what we're saying to get caught up. Okay, what the world's going on. And we were posting stuff in there. I was trying to post stuff in there. Even at later that evening, I was pasting stuff based on all my research that I could find, using variations of AI and trying to figure out what actually transpires so people could actually see what happened, so we can use this as a learning opportunity as well.
Yeah. To give you guys some context, this red candle right here, that is our black swan, but this is the S&P 500, so it's not going to capture everything. This is the old tariff war that was started by the president back in April. And then to give you a little more context, here's the VIX, aka the volatility. Barely got past 20, just a hair up there at like 22. So compared to everything else, it's not bad at all.
What's really interesting to me, Z? Sorry, please finish. Please.
No, go for, I was going to say, like, traditional markets, like Tracker just said, all those events are significantly more like impactful than this one. And like, you can just look at it. Like, there it is. This is starting a tariff war with the entire world. This is trying to tariff China at 100%. Yeah.
Man. If you ever want to see what's going on, just open up a 1 month chart of the VIX. If you want to see what true panic looks like, look at that. And that goes back, I think it started tracking on some of these back in 1990, as far as the VIX goes back further than that, but you can see what true just absolute sanity is. Like, look at the 08 crisis. 08 crisis, man. Yeah, we were elevated for many months over 60. And sometimes skyrocketing up to 80, 90. I mean, it was that's pure panic. And then, of course, during COVID, that was pure panic. You also had the .com bubble. That was pure panic. I mean, that's what panic looks like. And so
what's wild to me is if you go look at the gold chart against the VIX, the fact that we are as high as we are right now in terms of deviation from the VIX being raised is really, really notably in my mind. That's notable in my mind. Like, usually gold only runs like this with the VIX running like this hard. And like the VIX is pretty chill compared to gold at all-time highs. Like that's breaking that trend. So that's really interesting.
I would say the VIX is it's more uncertainty in the markets. The markets have pretty good certainty, so that's why the VIX is lower right now, because everybody knows the inflation is getting out of control. That's why people are flighting to gold, which we all know. But there's no true panic here. It's just that everybody knows, hey, gold is the trade right now because of the uncertainty.
Well, and
I
it's
mean,
interesting you said that, man. You connected something that, so Arthur Hayes said, like, basically the new economic model is based around the velocity and amount and like liquidity, like total amount of supply of money. Um, so like instead of it being about, reserves and backing and like productivity, it's just about the velocity and speed at which they're making more of it. And so
Correct.
maybe that is why the M2 and gold are doing what they're doing, right? Like that's why gold's
Mhm.
reacting like it is, because it's adopting to how they're treating fiat in real time.
Correct. That has a huge factor is how much circulating supply, and this is why the U.S. dollar. This is why nobody wants treasuries, because it's becoming worthless. It's nobody wants it, and I still will go back to what I'm saying. I think a lot of these tariff wars are still to force this debt upon countries, whether you like it or not. I don't know if you saw the deal that the United States just made with Argentina. They bailed them out of debt. I wonder what kind of back end deals went on in that one, but.
I did see it. I did see it. Well, and I think it's because they wanted more crypto exposure. That's my conspiracy theory.
Well, in Argentina,
It's
it
a way
is
to buy
funny.
Bitcoin without buying it, baby. And like if you guys have it and we own a piece of y'all, it's just as well. I think that's probably the approach. Probably a pretty easy handshake deal, I'd imagine.
Yeah, so that's some of the deals going on. And I know there's some interesting conversation. We can get into maybe next week, but how they're trying to basically use, I know we've talked about the stable coins, them using stable coins to kind of basically devalue the US dollar and kind of do a massive, removing of debt through it. And this is kind of forcing upon countries. I know there's something there. We could dive. It's a much deeper dive though, but there's definitely some interesting things going on with that whole paradox.
fair enough. Tell you what, gents, with that being said, how about we go ahead and get out of here for the week then? Any final closing thoughts on our autopsy of the great liquidation, if you will? Tracker, go first.
Yeah, sure.
Good sir.
Yeah, absolutely. Don't do leverage unless you're willing to lose everything. That's one. Two, central exchanges are great for quite a few things. For onboarding and offboarding, if you've got to go back into fiat out of crypto, they're great for that. There are some other ways to do that. If you want to come into our membership, we'd be more than happy to show you those options as well. There are actual central exchanges out there that don't require KYC. So there's some of those out there as well. I mean, use them at your own, based on what country you live in, you might run into problems with that, but there are some that don't require. Other things that came out of this were you can use central exchanges for trading to keep your transaction fees real low, because the fees are much more smaller than, say, if you're trading on say the Ethereum network. So they're great for those things. But outside of that, you don't really want to keep a lot of your stuff on central exchanges, as we all saw on Friday. Keep in mind now, this isn't though. We've had many other central exchanges that have had problems in the past too, due to liquidity problems. They go under, they crash, and if they go under, that your money's gone. You're not getting that money back because it's not backed by the FDIC, so you don't have that problem. We learned that that's bad. We know that being in spot's probably your most, safest bet. Always have a little bit of liquidity, dry powder on the side for these opportunities, because this was a huge opportunity on Friday and over the weekend to kind of deploy some capital. Be prepared, because this is going to happen again. 100% it's going to happen again. We've been talking about liquidity grabs. So watch the liquidity that's starting to come back up again and use those as your indicators for probably where price action may move to, because they tend to navigate to where the most liquidity is before they liquidate those folks in those levels. So use that in your guidance. Overall, I'm still very much bullish. I think this might be the flush that we needed, and hopefully we can start going up now in October and November and proceed to the next leg higher. Time will tell. But like I said, I'm so bullish, and hopefully things will start to smooth out here going forward, but be prepared for the more shenanigans that will come.
Well said, sir. Dace, you're up, big guy. I know it's hard to follow that one.
I have
You
nothing to
get
add.
basically everything.
I have nothing to add. My man pulled out the machine gun and covered the whole field. Yeah, no, what Tracker said, well said, sir. Yeah, come follow us and listen to us talk it through live as it happens over on the Telegram. And also at Dace Northall on Instagram and on X.
Love to hear it, sir. Alrighty, folks, you can find me on Instagram and X at ZenithDI. But outside of that, things I'm looking forward to. We do still have a next Federal Reserve meeting coming up on the 29th of October. By the way, since they are the Federal Reserve, they are neither federal nor a reserve. They operate even if the government's shut down. So you can still plan on that one, I'm pretty sure, unless Jerome pulls something wacky. But outside of that, we got that going on. And I'll continue to reiterate it. If you go off the 4-year cycle, top to top, we're looking at just a hair over 3 years and 11 months right now. We are in what is possibly the end game for this bull market. We are at the point where we've had a new Bitcoin all-time high. We are in the time spectrum as well. So it's very possible that we could be looking at the end game here within a month or so. That being said, I do think there are extenuating circumstances that do have the ability to push this cycle longer, namely the Federal Reserve doing quantitative easing and really trying to influence the money supply. We see that traditionally, whenever the money supply is inflated like that, asset prices increase, and that could be one of those things that pushes us a little bit longer. Time will be the only thing that really tells us, though. Until then, you just got to keep a weather eye on that horizon and just try to stay on top of it. If there ever was a time to pay attention to the crypto markets, I'd argue it's now. Like, lock in for maybe like 2-3 months. Odds are you're going to be very happy you did. So that's all I got. Folks, thank you so much for joining us. We do have our good buddy Centurion 54X and Moonpilled Rational Optics coming in here and showing some love to us. We appreciate you guys a lot. And I know that you guys are always focusing and keeping your eye on the ball. So I have no doubt that you're all doing well, despite the jokes saying that we're back to working at McDonald's. So, well, in case I don't see you back on the fry cook line, I hope that everyone has an excellent week. And we will catch you guys next Monday, 8 p.m. Eastern time again, as we break down what exactly is going on and where we stand. Alrighty. With that being said, thank you again so much. Good night, folks.